Welcome to Market View with Ike Iosa and Friends. The show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Good morning. Michael, your host for Market View guest. My very good friend is Erin Swenlin. Hi, Erin. How are you?
I am good. I hope everything's going well for you as well.
Yes, it is. Thank you. Erin, the S&P has been going sideways for the last 3 weeks. And I'm curious to hear your thoughts going forward, taking into consideration what the technicals look like under the surface.
Right. I think it's really interesting right now. You know, we have been expecting a decline for some time. I mean, 3 weeks moving sideways is, you know, we had a downside initiation climax. There's been plenty of things to tell us that we should be expecting a decline. But the market internals just aren't really that weak. They're still very strong. So we may end up with just, you know, seeing some sideways movement or a pause and then a move out of that. We're seeing a little bit of that today with a nice rally that's pushing us above that July top. So, you know, it's hard to be really bearish right now when the internals are so strong.
Okay, let's take a look at our first chart, the 1-year SPY.
Yes. So as I said, you can see a little tiny breakout on this particular chart. This is, of course, being recorded Friday during trading hours. And right now it is looking pretty good with a breakout currently. One of the things I'm noticing is the VIX is really overbought right now. I mean, we've sat at these overbought readings as well during this period of consolidation. Nobody seems to be all that worried. And, you know, typically that is kind of when you're going to see a pivot point to the downside. But at the same time, I'm looking at stochastics and they've turned up. So there's still a lot of internal strength. I mean, we have to be on our guard for a decline right now, but I'm feeling a little less concerned about one.
How about our next chart, the Swenlin trading oscillators?
Yes, so this is one of the charts that's also been telling us to look for a decline. We have negative divergences on the Swenlin trading oscillators. They're in decline, and typically when they decline, so does the market. But we have a bit of a positive divergence in that, you know, we're seeing, well, I guess I would still call it a negative divergence. We're seeing lower readings on the STOs, but prices continuing to move higher. So again, we're really set up for a decline here. Additionally, the ITBM and the ITVM have topped. Now, the ITVM did tick back up a little bit yesterday, but overall, these are really overbought indicators, and they are trying to turn over now. So again, really prime for a decline, and we've been seeing this for some time. I mean, that negative divergence on STOs has been there for quite some time. I didn't bring my new highs, new lows chart, but we're also seeing a negative divergence on new highs. So again, it's really set up for a decline, but the market just doesn't seem interested right now, and we have to take that into consideration.
It seems to me that following the November rally, the market is holding up, looking to the FOMC meeting next week to give it a reason to go higher. So it will be interesting what the market does after the conclusion of the FOMC meeting next week.
I think that will tell us quite a bit.
Yeah.
I know everybody's pretty much, I think we're safe in that we don't think they're going to raise rates. I think that's kind of a given at this point. But it'll be interesting. A lot of people have been pricing in a rate cut, and I do not see that coming until probably mid-2024. I don't even think it's going to come at the beginning of 2024, as a lot of people are betting. So it'll be interesting to see what the market reaction is to something that honestly I think is kind of priced in already, like you're saying. Yeah, I mean, exactly like you're saying. We've gotten this kind of digestion phase rather than a decline as people wait for that meeting to, confirm what they're thinking as far as rate hikes being over. But also, I know that they're looking at these reports that we've been getting in and thinking that, again, rates are going to be cut, and I'm not of that opinion.
Let's take a look at the bias charts.
Yes. So this is where we're seeing the internal strength. We've got plenty of stocks that are above their 20, 50, and 200-day EMAs. They're well above our 50% bullish threshold. We're starting to see only a tiny bit of decline in participation. The biggest problem on the bias chart that we see are the negative divergences between the Silver Cross Index and the Golden Cross Index as compared to price. We have lower readings than where we were at the prior top. We're now getting above that prior top. That's a bit of a problem. We should see a little bit better readings out of these indicators than what we are. Again, there's still internal strength. These the percent above their 20 and 50-day EMAs, those 79% readings are better than the 75% readings of the Silver Cross Index. So we know the Silver Cross Index could actually continue moving higher. It's getting ready to hit its upper threshold here because with only 79.4 above their 50% or their 50-day EMAs, that's going to be kind of the cutoff point as to how high the Silver Cross Index can get, because I didn't explain what these indexes do. The Golden Cross Index measures how many stocks have a 50-day EMA above the 200-day EMA. And the Silver Cross Index, we deemed a 20, 50-day EMA positive crossover as a Silver Cross. So how many stocks have a 20-day EMA above their 50-day EMA? That's what the Silver Cross shows us. So again, those numbers should be as high as they were back in July at that last top, and they're not. So again, there's all of these signs in the background that as far as the indicators go, we should expect a decline, but those internals just aren't weakening to the degree that we would expect before a decline. They're really holding up. And so I think we all have to be prepared for the idea that maybe this is about all we're going to see, and we're going to get the prices moving even higher.
How about gold?
Yeah, gold is an interesting, I brought that chart just because gold is kind of an interesting play right now. The dollar is looking far more bullish, and that's going to put some more downside pressure on gold. And GLD already lost one line of support. It looks like it's going to lose the 50-day EMA as support. I think it's going to go down and test that November low that we saw earlier at a minimum. That would put us at about the 200-day EMA. That's where I would start looking for reversal. However, if it does continue lower, now we're setting up a double top that I don't like. So gold is really vulnerable right now, and consequently gold miners are going to be very vulnerable. They're already pulling back. They've hit support, and I think they're going to lose support. Gold is not looking like a very good play right now. I'm not sure what's going on with that, except for the fact the dollar is starting to look more bullish.
Now, our next chart is the material sector, XLB.
Right. So what's interesting about this sector, on Fridays I do a trading room for my subscribers of the DP Diamonds report, and I always look for a sector to watch. And I'm really struggling right now for next week because materials look really good right now. We've got the PMO does look like it's turning over, but it's actually turning back up again above its signal line. And the PMO is not that overbought for materials. We've got really strong internals and certainly room for them to go higher. I mean, I like the look of materials. The problem is, right, is gold and gold miners are in materials. And those both look very, very bearish. But you know what? Materials is made up of more than just gold and gold miners. And I would say that they're looking pretty good right now on this reversal that we're getting after that decline. kind of setting up a flag formation, really, and getting ready to break out here from that flag. I think it looks pretty good for materials moving forward. I just think it's, if you're going to go to that area, I would still kind of avoid gold and gold miners.
And now last stock for the day is a diamond in the rough, AMCR.
Yes, so I had to bring something here as a possible trade. We went through this morning in our trading room. I ran one of my scans, and it came up with AMCR was one of the stocks. And I saw this chart. I really liked this chart. Granted, it's a bit on the overbought side, not as overbought as it could be, but I like that new surge above the signal line on the PMO. That's basically when the PMO bottoms above the signal line. That's an especially bullish setup. So I like that. Stochastics just got above 80 on it, and we're seeing some relative strength picking up for this stock against the SPY and against this group, and that sets it up very well moving forward. So I like it. I had a 7.5% stop set on this. This is exactly the kind of chart that I present in my GP Diamonds report. You're going to get 10 stock picks per week, 3 of them being ETFs on Wednesdays. And this is the kind of chart you're going to see. You're going to see a chart that is setting up very nicely. You're going to see charts with stop levels on them. And it gives you a really good opportunity to maybe take advantage of some of the trend and conditions that we're seeing in the sectors and in a lot of cases in the industry groups themselves. So I really like the way AMCR looks. And if I recall, PKG also looks pretty good moving forward as well. So this is my diamond in the rough for your viewers.
Erin, anything else you'd like to add?
I would just say that, we're welcoming new subscribers. If you are interested, we do run a free 2-week trial. All you have to do is use coupon code DPTrial2. If you like the bias chart that we showed earlier, we have biases listed for all of the sectors as well as indexes as well as select industry groups. And we put a bias table in our DP alert, and it shows you what the bias is for all of those. And right now, I will tell you, I didn't show you the bias table today, but everything has a bullish bias, everything except for energy. That's the only one. So we are, again, it shows a lot of internal strength in the market right now, and we really can't ignore it at this point. We have to be on a lookout for a decline. But I don't know. We could easily just move higher from here. I think you're right. I think a lot of this will be cleared up with the FOMC meeting. But again, as we talked about too, a lot of that's already priced in. And I think that's why we're getting just this little digestion phase rather than a decline. And if the internals stay this strong, again, we could see this being the only a sideways or consolidation movement and then another move up. So I think it's a really interesting time in the market, and really we are in some favorable seasonality right now as well. So I think it's looking pretty good going into the end of the year at this point. We'll just have to see if that pullback happens or not.
Erin, thank you. Happy holidays.
You as well, and to your viewers.